Today, we're going to break down a massive $60 billion short squeeze. And believe it or not, it all started with just one number. $105 million. I mean, just think about that. That is the total value of leveraged bets. We're talking borrowed money here, all piled up at a single price level, all of them betting the market would tank. What that does is it creates this giant, irresistible target.
So between December 3rd and the 9th, this huge buildup of leveraged bets, which you can see right here as these bright yellow bands of liquidity, basically acted like a giant magnet just waiting to pull the price in and cause a really violent move.
But here's where it gets really interesting. Just when every signal was screaming that a catastrophic drop was coming, the price did a complete 180 and reversed violently in the other direction. We're going to show you exactly how this trap was set. And by the way, for real-time analysis like this, you should be following us on Twitter.
All right, first things first, let's look at how the fuel for this absolute bonfire was stacked. This is the anatomy of a liquidity trap in the making.
This slide right here shows just how obvious the target was. You see that incredibly bright yellow band at the $90,000 level? Yeah, that's the $105 million peak. It was literally the largest single pool of money on the entire map. It was practically screaming to be taken out.
And it didn't stop there. The very next day, things got even crazier. By December 4th, short sellers had doubled down, adding even more fuel to the fire. You can see these new, super dense yellow bands forming above the market, especially between $92,000 and $94,000. They were building a wall of liquidation targets, just waiting for a spark.
Okay, so here's the key takeaway. Because all that money was betting against the market, but above where the price actually was, a huge move up, short squeeze, wasn't just possible, it was probable. It became the path of least resistance. The market had a big, fat, profitable target. If you're getting value from this breakdown, do me a favor and subscribe to the YouTube channel.
But before you can spring the trap, you have to bait it. The big players, the market makers, they had to set the perfect bear trap. And that brings us to the downward fakeout.
This comparison shows the deception perfectly. On December 5th, you can see the price wick down and hard. It briefly dipped below $90,000, probably just to shake out some weaker buyers. But look closely at what didn't happen. Those bright yellow bands, all that short seller money up at 92 and 94K, completely untouched.
Now this fakeout was a brilliant move. It had a dual purpose. First, it grabbed all the money from panicked buyers who were betting on a price increase. But second, and this is the crucial part, it tricked even more traders into thinking the price was going to dump, so they jumped in and started shorting. All they did was add more fuel for the real move that was just around the corner. If you're finding this valuable, drop a like and share it with someone who needs to see it.
Okay, so the trap is set, the fuel is loaded, now it was time to light the fuse and trigger the squeeze. This is where the cascade really begins.
So on December 7th, the reversal started. After luring in all those sellers, the price just began an explosive move up. It pushed aggressively off the lows and started hitting straight for those first big targets we saw around $92,000.
And then, bam! This is the moment the trap springs. On December 9th, the price just rockets straight through $92,000 and $94,000. Watch the screen. As that price candle shoots up, those bright yellow bands we've been tracking, they just disappear. That's it. That's hundreds of millions in short positions getting wiped out, which forces all those traders to buy back, and that just throws gasoline on the fire, creating this massive cascade.
So what happens after a move like that? What's the aftermath? Well, the entire market structure was completely transformed. This before and after picture tells you the whole story. On the left, that's the heat map from December 3rd, just loaded with liquidity waiting up top. And on the right, from the 9th, you can see that entire zone has been wiped clean. The board was cleared, and a brand new, much higher price range was established. And the impact was just huge. In 1 week, the market cap jumped by $60 billion. This wasn't some random market noise. It was a direct result of this engineered hunt for liquidity. We post data-driven insights like this all the time on Twitter, so give us a follow. All of this proves a really critical lesson for anyone in these markets today. Price doesn't just wander around and accidentally find liquidity. No, price actively hunts it. These massive moves are engineered to trigger these liquidation cascades and to punish crowded trades. So that leaves us with one big question, right? Now that this huge pool of short sellers is gone and the market has reset itself,
Where will the next trap be built? Subscribe and drop a like below. Follow us on X for more updates, and we'll see you in the next one.